Welcome to a fresh new edition of Climate Clock, and in less than 10 days, leaders of the world will gather in Dubai for COP28. That is the biggest annual gathering on climate, which starts on 30th November. What would the focus be this time? First would be the ongoing issue of climate finance, which is where developed nations have promised to provide finance to developing countries to fight climate change. It has not been provided to them yet and has been a topic of contention. Second would be carbon trading or carbon credits, the efficiency of these markets and what more can be done. A follow-up on the loss and damage fund. It was decided to create one last year to provide payouts to developing countries that have suffered from extreme weather conditions. GST or global stocktake. This is very important as it will evaluate progress made towards the goal of fighting climate change. The first ever GST will end next year and hence will be the focus. There will be tightening of reporting standards as well with respect to climate change. Now, the COP28 CEO designate is Dr. Sultan bin Al Ahmad Jabbar, who is the Minister of Industry and Advanced Technology of the United Arab Emirates and Managing Director and Group CEO of the Abu Dhabi National Oil Company. In his earlier speeches, he has focused on phasing out fossil fuel emissions instead of phasing out fossil fuels, and this has not been taken well by activists and experts globally. Also because it questions a fossil fuel company CEO heading a conversation around climate change when this is the industry responsible for maximum emissions. To discuss this and a lot more as to what is expected from COP28, I have a very special guest who is joining us now today. It's Dr. Ajay Mathur, who is the Director General at International Solar Alliance. Dr. Mathur, always a pleasure speaking with you and discussing the nuances of the climate change segment as well. And as I mentioned, there's so many things that would be discussed this time around, right? There is climate finance, there's loss and damage, there's also the global stocktake. What would be the priority according to you for COP28? What should be the focus areas?
I think there are three things that COP should focus on. The first is the global message of tripling of the renewable energy goals by 2030. That's the first one. Most important, it gives the right signal. The second is, how do you enable this? And the first issue there is financing. We expect that we would need something of the order of $2.4 trillion a year in renewable. We are already at about $1 trillion. Where will we get this money from? So that has to be a focus of COP. And the third thing that the COP has to focus on is, in order to provide the kinds of directions, the stocktake that you mentioned, Sonal, just a moment ago, we believe that a stocktake is important for countries to be able to plan their own goals. So whether it is our own goal of net zero by 2070, or it is focusing on decarbonizing our electricity sector and then our energy sector, all of it depends on the kinds of signals that we get out of COP.
You know, it's interesting. You spoke about how we need to focus on the renewable energy capacity as well. There have been a lot of questions about the place where it is happening this time around. So does it matter that a fossil fuel producing nation is the host and that would impact the decision making or the messaging as well?
Well, Sonal, remember, this is happening in the UAE. The UAE has been one of the world's leaders in renewable energy. They created Masdar way back in 2006. This is long ago. Till now, Masdar has invested or is going to invest approximately $30 billion. That's B with a B, billion dollars. There's about 20 gigawatts of capacity that they've already invested in. So this is the country where we first saw the 3 cents a kilowatt hour goal being breached. We saw the 2 cents a kilowatt hour goal being breached. And now Masdar is working on developing a large project, 1.8 gigawatts, 1,800 megawatts at a price of 1.6 cents per kilowatt hour. So all said and done, UAE is a leader in climate change.
Okay, interesting. So, you know, the next question is definitely on climate finance. Now that other things are taken care of, as you said, it continues to be a big issue. $100 billion is what developed nations had promised to developing nations. A recent report suggested that, yes, this amount has been, achieved as well. But climate finance, do you think that we'll need bigger amount, as you mentioned about renewable capacity as well? And who all do you think will be able to fund that? Will India be able to participate in this?
we have seen a huge amount of money coming into the renewable energy world, and particularly the solar world. Approximately, as I said, approximately $1 trillion is coming into various renewable energy things, manufacturing, production, and so on. Solar alone is going to receive about $380 billion. The problem is that the vast amount of this investment is going into the OECD countries and China. All of Africa is getting only 3% of this investment. This is a challenge. And therefore, the financing has to be such that it moves into areas where it has not been going, because we cannot leave anybody behind. Otherwise, carbon dioxide emissions will continue to occur. We notice that, for example, if you're looking at Africa, for universal energy access, solar mini grids are now the cheapest option, and grid extension is now a second, which implies that investment in solar can enhance. The issue is, how do we get countries to invest in this? We need guarantees. So the developed countries, if they can provide resources as guarantees, it will pull in the private sector money that is needed for this change to happen.
Okay, so we are seeing enough participation coming in from private players as well, Dr. Mathur?
Well, the vast amount of this money, the vast amount of this trillion, something of the order of 800 billion is actually private sector money. The rest is resources that have been put by approximately 150 billion is resources that have been put by a number of bilateral agencies. And only about 50 billion is actually monies that have been put in by governments. This is a very small amount. As I said earlier, the problem is that the private sector money is not going into all geographies. It's particularly going to the OECD and China.
Okay, so that needs to be worked on as well. And as you rightly mentioned, that more needs to be done here as well. You know, the other interesting thing that has happened, Dr. Mathur, that India has expanded coal production capacity ahead of COP. What does this indicate? Does this not take away from the focus on renewable energy that we have been talking about?
I mean, remember that the vast amount of renewables is solar and wind. That occurs when the sun is shining and the wind is blowing. What happens when neither of them are? We are talking of storage. So unless cost-effective storage we are able to reach it, this will continue to be a challenge. Because in countries like India, where the demand is growing, how on earth do you meet the demand when the sun is not shining and the wind is not blowing? Well, we'll have to go in with the kinds of capacities that we already have, which in our case is coal. The good thing is that we have for the first time seen round-the-clock firm electricity at 85% availability, as is the case with coal power. This is being provided at cost-effective rates in the recent tender by the Railway Energy Management Company. It was a large tender, 1,000 megawatts, a gigawatt. And they found prices between 3.99 rupees a kilowatt hour and 4.21 rupees per kilowatt hour. This is far cheaper than other fossil fuels. Can we expand it? That is our challenge. And this is solar plus wind plus a storage.
So storage continues to be the big focus point, right? If you have to make renewables work, you need a storage infrastructure in place as well. So in that case, are we seeing more investments coming up in India? Are global players interested in the renewable and the storage place for the country? And we always talk about it being a business as well, right? So how do investments compare with the returns that these players are getting here?
Well, generally speaking, on solar and wind projects with storage or without, we get returns somewhere in the vicinity of 12 to 14%. I mean, there's a little bit of tendering and therefore bids, so it's a little opaque. But when you back calculate, it seems that the returns are 12 to 14%. This is reasonable. I mean, for a market like India, where you first take care of hedging costs, then you take care of the inflation, we are still seeing 4 to 6% returns in real terms. This is reasonably good by global standards. The challenge is, as far as batteries are concerned, where is the manufacturing capacity? if India has to move to renewables, we need a huge amount of storage to be set up. This only India would use up all the battery manufacturing capacity that there is in the world. We need this to expand by an order of 3 by 2030 in order for this transition to occur.
Okay, by 3 times for this transition to occur. So in that case, do you think the global stocktake could disappoint the world? Are there indications on which countries did make some progress? Where does India stand here?
India has always been doing well. And part of the reason is that we have a deep financial market, and therefore the vast amount of resources that have been invested are domestic resources. The challenge occurs in countries where you expect the developed country private sector to invest, and the financial markets are not deep enough or are too risky to attract investments. We already have something of the order of 180 gigawatts of renewable energy, of non-fossil fuel capacity. We can build it up to 500. In fact, we can build it to 900 gigawatts if storage is available, cost-effective storage is available.